Is the bottom finally in? Where are we in the multi-year crypto cycle? It's trading day at Abra, and we've got some of our leading experts on crypto trading here to discuss all this and our weekly AAA, Ask Abra Anything. All right, gang, let's do this. All right, gang. Hello, welcome to Money Talks. I'm your host, Bill Barheit, founder and CEO at Abra. We've got a couple of guests that'll be joining us in a few minutes. And before we get there, I want to give you an update on what we're seeing. Of course, it's another quiet week in crypto land. Anyway, let me give you a quick perspective on where we are. The most common question that I'm getting here is the bottom in? What are we seeing in the markets? Where are we going from here? What should I do? Right. So we don't give investment advice on Abra, but I will give you my perspective as somebody who's seen multiple cycles here on where we are. I'm going to show you something that a friend of mine and I were looking at a couple of days ago when I share my screen here in a second. And then I'm going to read to you something that a friend of ours wrote yesterday, which I found super interesting about where we are vis-a-vis the bottom. But let me start off with this. I hope you can see this. These charts are always sometimes a little bit. Let me see what you guys see here. So what you're looking at here is basically the price of Bitcoin on a log chart from late 2010 through last September. Okay, and you can see the peak here at about, on the chart, it was at about 50,000. Now, we didn't change this chart at all. All we did was overlay the chart with bands on the top and bottoms, the peaks and the troughs of the cycles, right? And extended that out a few years. Now, what we did yesterday was, without changing the chart at all, we filled in the blanks for what transpired since we created the chart in September of last year. And look at this. Let me see if I can get this to come here. Yeah, there you go. All right. So what you see here now is basically the price action from that day, basically the red line that you see in the charts to the right. And you can see that we are now bouncing off the bottom of this channel. It's truly incredible. Like, it's almost like it was designed to do this. And I would probably go back and claim that if you look at other exponential technologies like Amazon and others, I wouldn't be surprised, and I haven't done this, and I probably will, if they actually follow a similar pattern. Now, this is not a guarantee, and it's not investment advice. Are we bouncing off the lows? Are we going to basically go up here, which would put Bitcoin on the log chart at something like 125,000 in the next 9 months? No, I have no idea what's going to happen, right? It's quite possible that this doesn't have enough data points or sampling size and it breaks down and we end up at 10,000 Bitcoin for all I know. Okay, I don't expect that to happen. My expectation is that the pattern will hold. It's kind of like a metronome, tick tock, and we're here in that sine wave cyclical pattern. And I do expect us to move higher. And I expect that the money printers that have invariably created these cycles of money supply combined with exponential assets are going to get us there. Super interesting. All right. So to that end, it looks like, like I said, we've been bouncing off the lows. And my take is we probably wouldn't have gone much lower than 20,000 in this cycle anyway, if it were not for FTX, and we would be bouncing even higher now, probably in the 25,000 range. But again, that's speculation, since it's not going to happen, since that's a past that never occurred. Okay. All right. So super interesting. Thanks for hiking for the help on that chart. Let's see what else. Oh, I wanted to talk to you for a minute about like this whole bottom discussion, right? So what does it mean to be at the bottom, and how can we define a bottom in crypto? All right. So there's a few ways to look at this. One of the best writers, ironically, in crypto the last year or so has emerged as Arthur Hayes, who was the founder of BitMEX. And I think he was under house arrest for some of the issues in the early days of founding BitMEX, and he's used the time incredibly well to perfect his writing. Anyway, he wrote, I'm going to read this to you. I normally don't like to just read, but this is, I can't say it any better. So the Bitcoin US dollar perpetual swap, which was invented by BitMEX, is the most traded of any crypto instrument. It's traded more than Bitcoin itself or any other crypto asset. The number of long and short contracts that are open is called open interest, or OI. This OI tells us how speculative the market is. So the more speculative is, the more leverage is being used. Okay. And when the price changes directions very quickly, it usually leads to very large amounts of liquidations, because when you use leverage, the more leverage you use, the faster you get liquidated if the price moves against the bet that you've made. In this case, the all-time high in open interest coincided with the all-time high of Bitcoin last year, right? Which makes sense, meaning people were basically following the herd, and the herd got bigger and bigger and bigger. But as the market fell, longs at the margins got liquidated or closed their long positions, which caused the open interest to fall. You've often heard me use this expression of the rubber band winding up and the rubber band unwinding, right, to get ready for the next move, right? And that's what open interest basically does. It represents the winding and unwinding of this rubber band via liquidations and then, more and more buys again. So taking a look at the sum of open interest across all major crypto derivative centralized exchanges, we can see that the open interest local low coincided with the sub $1,600 stab of Bitcoin, which was Monday, November 14th, which was a little less than a month ago. Now the open interest is back to levels not seen since early 2021. Okay, so the timing and magnitude of the reduction of this open interest leads me to believe, and this is Arthur, but it also leads me to believe that most of the over-leveraged long positions have been extinguished. What does that mean in English? It means that remaining traders are using derivatives as a hedge, and those using very, very low leverage. This is usually a bedrock to move higher because there's no one left to liquidate. So, of course, the open interest could fall further as we enter a sideways, non-volatile part of the bear market. Could happen, but the open interest rate of change will slow dramatically, which means that chaotic trading periods featuring leverage or large amounts of liquidations are not likely to occur. If you combine that, now this is Bill talking, if you combine that with the fact that we are entering into a dramatic slowdown in the economy, fastest credit tightening we've ever seen, which means we are likely to get back into a cycle of money printing again. Okay. As Arthur says here, I don't know if 16,000 was this cycle's bottom, but I do have confidence, as do I, that it was due to the cessation of forced selling brought on by a credit contraction. And as I keep telling you, it's the fastest credit contraction we've certainly seen in my lifetime. So I don't know when or if the US Federal Reserve will start printing money again. However, I believe the US Treasury market will become dysfunctional at some point in 23 due to their tightening monetary policies. I actually expect to see a period of disinflation, which is counter to what most economists expect. But at that point, I'm sure the Fed is going to have no choice but to turn the printer back on. And then, as Arthur says, boom shakalaka, Bitcoin and all other risk assets will spike higher. Okay. And as I've told you, my opinion, again, not investment advice, is that when that happens, Ethereum and other altcoins will get the outsized benefit of that. Of course, Bitcoin will move according to, most likely, again, no guarantee, not investment advice, according to the chart I showed you, meaning that it will still have, bumps significantly higher on a log chart, but not with the dramatic movements that we saw in each of the past cycles. And it is flattening out over time, but still we're heading towards, over the next, 6-7 years, $250,000 Bitcoin if the cycle holds, probably 300,000 by the end of the decade or more. My prediction is still 500,000 to 1 million, but again, a lot of things can happen between now and then. All right, so keep teeing up your questions. We've got the Abra trading team joining us in a moment here. We'll bring them on in a moment. Just a quick check. We've got Ether is basically moving sideways this week after basically, I think it was last last week, early last week, we recovered a little bit off the lows, probably 20% movement, and we've been moving sideways since then. And to Arthur's point, open interest on the leverage front has basically fallen off a cliff, which is a very, very good bottom signal. Okay. All right. So that having been said, let's see. I think, one other thing I was asked to remind you. So let me give you a quick update on Abra Trade. So you all probably got emails that the upgrade to the new market orders, price protection features are finished. So you must upgrade and update your Abra app now. Do it now, please. You can do it while you're watching. I'll forgive you. And if you're depositing crypto, when you're depositing crypto into Abra, make sure you generate a new deposit address. If you have an old deposit address, don't use it. Update the app, generate a new deposit address. As of, I think, next week, the old deposit addresses are no longer going to work. You must generate a new deposit address directly in the app. Okay. Let's see. So yeah, keep teeing up the questions and we will get to them. We're going to basically have a discussion with the trading team here. Let's relate that to this cycle, right? So maybe we're at the bottom. I want to basically start within my institution, my family office. I'm a high net worth individual, or maybe I'm just a consumer and I want to start trading all this. How can I take advantage of that? So to answer that, we've got a couple of the world's leading experts in crypto trading who are going to join us. So we'll bring them on up. We've got Robert and Bob and Rob. Welcome to Money Talks, guys. How's it going? Bob, you are on mute. So just so you know, all right, there we go. So we've got Bob and Rob. Welcome, guys, to Welcome to Money Talks.
Thanks for having me.
All right, so why don't we start off with some quick intros. We'll start off with Bob. Go ahead. Tell us what your role is at Abra and how you got into crypto.
I joined Abra due to my interest in crypto. I had been doing some of my own strategies, basis trade strategies, and saw an opportunity to join a firm like Abra and really build up from there the trading offering. And I thought this was going to be a great opportunity, and it has been as of yet.
Yep. And so what is your role at Abra?
Head of trading.
Okay, head of trading. Nice, right on. And Robert, welcome. So how did you get into crypto?
Oh, well, first of all, thanks very much, Bill, for having us on, and really excited to be here with you and with all your viewers who are actually most of them clients of ours. I am the VP of global sales, so I'm responsible for our global sales team that provides a white glove, very high touch service that, again, many of your viewers here today have already experienced to both individual and institutional clients in all over the world. So how did I get into crypto? So having been in the foreign currency trading business for, over 25 years for some of the largest banks, I started getting to read about crypto, about Bitcoin specifically, and saw a very, very natural transition from currencies into crypto and into Bitcoin specifically. I started viewing Bitcoin as kind of the answer early on in 2018, 2019. I started viewing Bitcoin as the answer to some of the antiquities of the foreign exchange market, payments with SWIFT and 1970s technology. And as I started learning more about Bitcoin, I kind of thought that was going to be the answer to some of those problems. So I got completely hooked, line and sinker, and started investing in it myself. And it wasn't enough. I needed to have my whole career in it. So that's why I was lucky enough to join Abra.
Got it. And so let's segue that into my first question for Robert. Who are our institutional clients and what geographies and where are they?
Sure. So institutional clients have a very wide kind of a range of types of clients. They could be family offices and foundations. They can also be crypto native type companies like ATM service providers, Bitcoin ATM service providers. It could be crypto fund managers who are specifically investing in crypto assets, but can also be traditional asset managers, traditional TradFi asset managers that are starting to allocate portions of their investment portfolios towards crypto. And so they really run the whole gamut. We service all of them. They all have different kinds of needs of why they're in crypto, and Abra is really, their premier provider across the board for that. And where are they? What geography? Is really all over the world, which is another reason that I got so into crypto, because having been in FX, which is a pretty global business, crypto is even more global. Our clients are not only in the U.S. and North America, Europe, Middle East, Africa, all over Asia and Southeast Asia. So really, truly the most global business that I've ever been part of. And we have our sales team, our global sales team, caters to all of them, and it's touching them all over the world.
Yep. Yeah, I can tell you personally, it feels like I have more and more calls before 8 a.m. Pacific time. I'm on the West Coast of the United States, and more and more calls after 6 p.m. Pacific time, which is a function of the fact that we've got more and more clients in Europe and the Middle East that I talk to early in the day, and more and more clients in Asia that I talk to in the evening. And then of course, we have our normal work day in during United States working hours as well. So it's truly become a global phenomenon for us, which is fantastic. So Bob, how do we have some people here who may use these services but aren't necessarily traders as a profession. So what is over-the-counter trading? How is that different than just, like, let's say, using the Abra app to buy Bitcoin? And what are our over-the-counter trading services?
Yes, thanks, Bill. So our OTC trading capabilities, let me just start with what OTC means. It means over-the-counter, and it means non-exchange based trading. So it is direct between two counterparties, which historically, and I come from a foreign exchange background like Robert, allows for better pricing between you are taking the pricing of an individual counterparty versus the pricing of a second counterparty. And in each counterparty, they have their own pricing mechanism. So with an exchange, you kind of have transparency, but with OTC, it allows you to have better pricing through those counterparties. And that's what Abra has developed on our side. We just developed a platform of high quality liquidity providers to provide us pricing, as well as having exchange pricing built in as well that we can aggregate. And I think this is what speaks to Robert's white glove service that Abra offers, and the fact that we can provide this to our high net worth individuals, our traditional finance institutions, our corporate treasuries. And it really sets us apart, I believe, from our competitors in the space, because we built it the right way and we built it with scale to move further out the curve for our individuals.
Yep. So let's take an example, right? So let's say I want to buy $1 million worth of Ethereum.
Yes.
Now, if I was to go to the Abra app or any exchange and try to buy $1 million of Ethereum, what would probably happen is the price would start to swing dramatically higher. If it's a market order, the price would just swing dramatically higher in order to fill that order. And if I put in a limit order, basically say, don't buy unless it's at or under this price, right? I'm going to see tiny amounts get filled and the market probably move much higher and basically ignore the rest of my order for at least several hours, unless I'm trying to catch a falling knife, right? And so how does the over-the-counter model you're describing help with those problems?
Well, yes, and similar to what you have seen in in other markets, these liquidity providers do take some balance sheet risk against this pricing. And assigning balance sheet risk to this pricing versus an exchange that automatically just triggers an order, they assign principal risk to it and thus provide a more stable market than what you would get through an exchange. But Abra has to go out and develop these relationships. They have to build it. They have to structure it the right way, and they have to choose the right liquidity providers that are going to price things for our clients and for our full offering with a little bit of risk on their end, allowing our individuals to get the best pricing. And I think this makes a difference when we go out there into the market, that we're not moving markets, we're not really, causing the prices to swing drastically either way. And in the end, it's a service for everyone.
Yeah. Okay. So Robert, what product and trading strategies can clients access today, and where are you seeing the most interest?
So I would say that the most common is really as simple as the regular spot trade. That is the most common trade that we're seeing from our clients. So what is a spot trade? Spot refers to basically, in any asset class, the instant or immediate settlement of that transaction, whether you're buying or selling either an FX transaction of commodities, or in crypto, it could be Bitcoin or Ethereum, any cryptocurrency, for immediate settlement. And for crypto, immediate settlement could be like 1 hour or 2 hours. And as opposed to spot in some of the other asset classes like FX or spot gold or spot silver, that's just always T+2. So when you hear someone say, a spot trade, it always referring to the settlement, the immediate settlement of that transaction. And our clients really, and it really runs the gamut of individual clients who just want to either buy, get more access to Bitcoin, for example, or just buying crypto through our desk, or selling what they might have to take profit, et cetera. And the beauty of the OTC desk, it really is what Bob and his team have built, is the one-on-one service, right? They could just go and buy and sell on an app for sure, right? But what if they have a larger amount to do? And what if they're not really sure where in the market they should be placing these orders? Well, that's where the one-on-one service is. Our sales team, while we're not giving them investment advice, we're letting them know, okay, this is where we see the market. This is where we see a lot of buy orders are around this level. We have a lot of sell orders are around this level. This may not be a good level to put one in. This might be a good level to put limited. And we kind of help them work through where they should be buying and selling in the market. And our sales team, together with Bob's trading team, will be interacting directly about what's going on in the market and kind of really making the most efficient way to execute that trade. So that's just a spot. There are a bunch of other strategies as well. Yep. But that is the most.
And then there's programmatic access, right? So if my app or my service wants to automate the buy or sell of crypto, for example, right? Because I'm selling it myself, or I need to hedge something, then they would use APIs, for example, right?
Absolutely, yes. And Bob could probably speak to that best, but that's absolutely the what they would use, because our API would connect to them, and they could just automatically just be with no human involved in it at all.
Yep. So Bob, how have we set up and structured our OTC desk and services at Abra?
So to go along the line that Robert just discussed, and we set up the voice desk, which is the voice OTC desk, but we've also structured it to have this API and this UI offering. So voice, API, UI. And within that structure, we believe that allows our clients to have the full suite of products that they would be looking to execute upon. To speak to the voice, we've already discussed that. A voice trade comes into the desk, they look at high quality counterparties, and they source liquidity and execute. With the API, application programming interface, they go from the platform direct to like their own business platform to an actual trading platform direct. Yep. So it's pretty seamless on the back end, and then it allows 24/7 trading through the crypto market, just like you would see through traditional markets, which are more 24/5. And then finally, you have the UI, which we are really excited about here at Abra, and that's kind of what all the traders in the world throughout any market are used to dealing on, is the web-based interface that they can click, trade, see the liquidity, see the volumes, seeing the pricing, and then through there they have the structure to really input orders, either market, limit, stop losses against those limits, and then do what we know, TWAPs, which are time-weighted average pricing, VWAPs, which are volume-weighted average pricing. And that's definitely for the more sophisticated investors, but for them, that's crucial for their execution, that they can source liquidity against volume and against time. And it just streamlines the whole process for them.
Got it. So what are you most, put you on the spot, Bob. So what are you most excited about in terms of, what's happening in the crypto trading world, either as it relates to Abra or not, or both?
Honestly, I'm very excited about what's coming. I think what has happened in terms of our progression as a firm, but also the offerings that you're seeing in the crypto space, it's going very much toward that capital markets offering that we know from our traditional finance days. Yep. And in that, we're being able to trade the asset class that we enjoy trading it. And I think the UI is really going to, and you're seeing it start with a few firms, but I like where Abra is right now versus our competitors, and the fact that we have built it all at an extremely high level. And it's all being marketed right now with Robert's team. And I think, having the full suite of offerings here at Abra makes a huge difference. And that's honestly what I'm most excited about. And then with that, the option offering as well, that allows clients to risk manage better through options than maybe they can do through spot. And I think that really brings a whole nother institutional client base that will really come into the space and really drive prices higher too.
Yeah, I'm going to ask Robert a question, and I want to make one point. I think we have a lot of folks watching that are from both institutional, maybe family offices, maybe representing larger clients as well. But then we also have some retail folks that are asking questions about why do I care about this? And I want to make a point, and it's I think super important, and that is the capital markets that Bob and Rob's teams are serving are essential in creating functional markets for retail, in my opinion. Okay, they smooth out the markets, they close holes in pricing arbitrage that would otherwise screw consumers. They enable larger buys without moving spot markets, and a whole bunch of other factors that I think really go into creating functional, fair, efficient markets across the crypto spectrum. So Robert, to that end, how do you feel that sales and trading relationship factors into this whole thing? Like, how does sales work in this regard?
It's absolutely critical. Sales cannot do their job for clients without having a very kind of seamless trading sales relationship. We spend all of our day interacting, when I say we, sales and trading, on analyzing the best hedging strategies, how the market is behaving. Bob brought up options before, and I was going to bring it up as well. It's one of the most exciting parts of our offering. Bob's team has got all these offerings that are now available to our clients. And that's a real important hedging instrument and strategy, options. Clients who are exposed, whether it's institutional or individual clients who are exposed to Bitcoin, may be worried about the price, and they may want to protect themselves, so they can actually engage with us by transacting options with us. And we wouldn't be able to do that without a very fluid relationship that sales has with trading.
Yeah. So Bob, what's the other side of the desk's perspective on that?
I think it's just, what I really enjoy about, Robert's team is that they come to us with a problem and we find a solution. And I think that's how a true trading and sales relationship should be. That's what I joined trading when, 15 years ago, for that reason, to try and find that solution. And it's either through spot, options, a structured product. That's the goal of every trading desk, is to figure out a solution for the end user. And, these are some complex problems that, the further out the curve you go, the further out in terms of like the risk profile of the institution you deal with. But that's why you hire high quality individuals and a great team, and surround yourself with a great team. And that's what Abra has built. So there is no solution we cannot find. Okay,
so I agree. Thanks, guys. That's awesome. So let's segue this into a discussion on credit. So right now, of course, centralized lending is kind of the bane of everyone's existence in crypto. Everybody's angry about, poor risk management practices, losses, and over leverage, et cetera, et cetera. But I would posit that well-run lending services are essential to make capital markets function, right? Yeah. And it's an essential part of what we offer at Abra. So maybe you guys can give us a perspective on how the benefit of our credit business being aligned with our trading group when it comes to servicing large clients and institutions. So Bob, go ahead, you first.
I'll take that way. Having the lending offering at Abra aligned with trading allows us to offer credit to institutions that need to have that instant settlement. And then on that side, they're able to function their businesses, allowing for more efficient markets across the entire ecosystem. And I think as the lending market has contracted, as you noted, Bill, we've still been out there and we've still been active, and that has allowed our clients to continue to do business and for them to continue to do business through us. And I think they view that as a value add from Abra, and we believe they go hand in hand. And I believe that's has been one of our edges in the space, in that if you can provide credit, provide margin to clients to trade, it allows for more efficient markets, it allows for a more efficient ecosystem, and it keeps functioning markets and functioning, the full architecture functioning. So we're excited on that end. But it also is key that we have a credit team that works hard, does their due diligence on counterparty risk, is aligned on risk management protocols, and has built a real solid understanding of the landscape they work within through very difficult times.
Totally agree. I mean, the risk team has basically been putting in the hours the last few months for sure, and it's paid off for us, and I'm sure it will continue to do so. So Robert, what's the sales perspective on where and how credit fits in, and how does that align with trading and trading operations for you guys?
So I would just add to what Bob was saying, and I'll give some examples of actual, types of clients that really rely on us for credit. So I look at an ATM machine, a crypto ATM service provider that might have hundreds of ATM machines, basically all over the country and all over the world. And they are relying first on us for a wholesale price on crypto, and in order for them to build the inventory so that they can provide the crypto to their clients, right? But they need instant settlement, right? They need to be able to provide that immediately. And there might be, 1, 2, 3 days where they need to kind of borrow some of that crypto, Bitcoin from us, so they can provide that. So we have a very, very strong credit due diligence process, very robust. And once that is complete, and then we're able to let them do their business. So that's just one example. And there are other many types of examples, whether it be fund managers, or others who just need the credit in order to facilitate their business. So we're, I think, the only player, I think, in the industry that's able to kind of very comprehensively use our credit services to provide a real service to our clients from a trading perspective as well.
Yep. Yeah. And we talk about the risk management aspects of this all the time here on Money Talks, and it's really become a key part of our offering, right? We're in the risk business. And obviously we've built technology to help us manage that. But if you're doing something that takes money in and provides money out and generates interest income as a result, you are in the risk business. And that's how we collectively look at this at Abra, and make sure that our clients perceive that they're in the same boat from that perspective. And look, the other red herring or elephant in the room is losses, right? If you're in the lending business, you have losses. Every bank has losses. Every lender has losses. The only people who don't have losses don't lend. Okay. So that's not the question. All right. We obviously don't want losses. We do everything we can to prevent losses, but you have to put a box around it from a risk management perspective to make sure that when there's a loss, it doesn't represent contagion to the entire business, not to mention to the entire industry. And of course, you don't use excessive leverage. Excessive leverage is not necessary in crypto. It's not. You've got an exponentially growing asset, moves up and down exponentially. You don't need excessive leverage. It makes no sense. Anyway, I know you guys know this. I'm kind of preaching to an audience who may or may not be interested. But anyway, anything you guys want to end with? This has been super interesting. Thanks for giving us some of your valuable time. I know every minute here is precious, but yeah, anything you guys want to share closing? Robert, how about you first? Oh, you're on mute, Robert. So start over.
Sorry about that. Yeah. No, it's just thanks very much for having us on. It's a real pleasure, serving all of our clients. I'm really proud and excited about how we're developing with our offering, especially specifically to our OTC trading opportunities.
Awesome. Bob?
Yeah, just to second that, really thank you for having me, Bill. Really enjoyed this with Robert as well. And I think we do have right now a full service offering from the lending to the OTC, from the API to the UI. And I'm really excited what we're going to do with that over the next few months. And it's been a lift to get it there, but we have done it in the right way. And we built a strong risk management structure around it. And it's been a great team on the back end and the front end. And, honestly, we're looking forward to months ahead.
Awesome. You guys have built quite an operation at Abra. We're super proud of what you've accomplished the last couple of years. And, we're very grateful for your guys' efforts in the face of a lot of irresponsible efforts from others in the space. And so on behalf of everyone, thank you for that. And we'll let you guys get back to it. And I'm going to do an AA here, but thanks again for joining and giving us your perspective. We really appreciate it.
Thank you, Bill. Thanks all.
Thank you.
All right. So thanks, Bob and Rob, for joining Money Talks. We'll have them on again and we'll get an update soon. I've got a whole bunch of questions teed up here from all of you. I'm going to take about 5-10 minutes and answer a few questions and then get back to it. Got a busy day here running Abra. So let's see. Somebody wants to know about CPRX being released. I'm sure many of you do. We are working on it. We do plan to allow you to withdraw and deposit CPRX very, very soon. It is in testing now. And so as soon as it is functioning correctly, we will allow you to do it. And then after that, we are figuring out how to turn on CPRX trading. Again, we don't run an exchange at Abra. We don't run an order book. So when we enable trading, we have to rely on liquidity from others. And so we're working on that. Okay. So I will take some other questions as well. Let's see. Live Grain says, confused by DOT, you pay boost yield on it, I believe via staking, but you don't allow transfers of DOT into Abra. I don't think that's true. I'll ask the support team to clarify if I'm misunderstanding something. So maybe you're just not finding it in the app. I'm not sure. Let's see. All right. So if I'm happy to talk about C perks. If I see anybody bad mouthing anybody else here, we're just going to block you. I don't really have time to deal with it. So I'm just going to start using block a little bit more religiously, which I hate doing, but I really am trying to filter through people who have genuinely good and useful questions for the team. Let's see. Talked about DOT. Jessica's asking, do people from New Jersey have access to Boost? And the answer is, Jessica, yes, you do. You have to be an accredited investor to use Boost today from New Jersey. So you would just go through the accreditation process within the app. There you go. Okay. Support told me DOT is not allowed into Abra at the moment. Okay. So you may have more, there may be an issue with the DOT deposits at the moment. I'll try to get an update for you there and share it out. Philosophical, usually I go to the top questions first. This new question from a second ago just caught my eye. Why hasn't Bitcoin decoupled from broader equity and commodities markets? So I would say two things. One, it doesn't really matter that much. What really matters more is money supply. So if you actually look at changes in money supply, and we've talked about this many, many times on Money Talks, that's what drives risk on assets. But when you have assets that tend to grow exponentially over time in terms of adoption, they have outsized moves versus things like equities, which will always have smaller moves, linear in nature. Okay. So I don't know that the right way to think about it is couple or decouple from equities and commodities. It is the idea that you're going to get outsized returns in a portfolio if you're just focused on price. Like I said, we focus on a lot more than price at Abra because we use the technology. But there you go. Okay. Let me see. Thank you for the Abra team. Excited about the future of all things Abra. Thanks for that link. There are rumors that Tether will be shorted and thus crushed. So, Christine, I'm not sure what your question is. I'm sure that there are institutions shorting Tether all the time. It's not my ideal trade. My perspective so far has remained that Tether is fine and functioning. And so, people are certainly within their rights to borrow and short anything that they can borrow and short, but it's not something that I would certainly recommend doing. Let's see what else. Got a few more questions here. Thanks to Bob and Robert, super interesting. They really know their stuff. Absolutely. So getting some nice compliments to you guys, Robert and Bob. Thanks again for joining. Here's an interesting one. What do Bitcoin maximalists have wrong about Ethereum? So we've done many deep dives on Ethereum on Abra, especially leading up to the merger earlier this year and even last year. And we'll do more again. I'm going to dig into the roadmap and some of the use cases that Vitalik just wrote about recently. He published a really long article, which I've been digging into. Look, I think that Bitcoin maximalists focus unnecessarily on Ethereum and altcoins. All right. I think that Bitcoin needs to change very slowly, if at all. Right. You can't change the atomic structure of gold. Right. We have as much gold in the universe today as we're ever going to have. Full stop. So therefore, if Bitcoin is digital gold, it should also change very, very slowly, because of course you can change software, but the way the consensus rules for Bitcoin work make it very difficult to change, and it should be. So then the question becomes, how does Bitcoin change And why should it change if it ever does? For example, we recently added Taproot, which is a very interesting, important upgrade, which is going to be used for things like smart contracts, right? There's a new project out of Lightning Labs called Taro, which is super interesting for enabling stablecoins on top of Bitcoin, which was only possible because of this upgrade to Bitcoin. So it becomes more and more difficult to integrate new technologies into Bitcoin as Bitcoin gets used more and more. It's common sense. What altcoins do is they also represent competitive technologies that can often move much faster under the guise of move faster and break things. You would never want to move faster and break things inside of Bitcoin, but you can do that with altcoins. So if Litecoin, and I use this example all the time, if Litecoin integrates Mimblewimble, which I think is very interesting technology, that gives us a viable demonstration as to whether or not it can work at any kind of scale. And then we can have the debate about whether or not different privacy functions make sense to become part of the core Bitcoin software, right? We will have that debate anyway, but it helps to have the debate when you actually have coins functioning and tokens and blockchains functioning that have privacy capabilities built in, for example. All right, so that's my perspective on changing Bitcoin as it relates to other cryptocurrencies. Now, specifically as it relates to Ether, this makes me insane because Bitcoin and Ether are solving two very different problems, right? Bitcoin is basically trying to replace money. It's trying to become the sound money of the future. It's not really even money in the traditional sense. It's software, but it's software that can replace traditional government-backed money. Certainly for both large-scale settlements, large-scale money movements, and having a reserve asset that a third party can't change. Ethereum, in my opinion, is the decentralized application deployment platform of the future. Let me say that again. I'm going to explain the words. Ethereum is the decentralized application deployment platform. What does decentralized mean? It means that it's not running on a single central server. Just like Amazon runs on a set of servers that Amazon owns, Google runs on their servers, Apple, et cetera, Ethereum should be running everywhere. So it's decentralized and enables applications, right, on this decentralized platform. And those applications can replace banking, which is the killer app right now, right, around DeFi and stable coins and whatnot, eventually gaming. So Bitcoin is not trying to solve these problems. So it makes me insane that, the maxis, many of my friends, right, we debate this. I had dinner with a couple last week and we had this discussion again. Why do you guys spend time on this, right? Why is Michael Saylor obsessed with whether or not Ethereum has become a security? It's bullshit. It's nonsense. Why do you spend time on this? Spend your time talking about the future of Bitcoin because that's what you ultimately care about. And anyway, so you get my point. All right. Ron asks, what are my thoughts on the future of stablecoins as central bank digital currencies are rolled out? Yeah, I actually was on another podcast with Brett King and Rob Tersick, which is coming out in a couple of weeks yesterday, and we talked about this. And central bank digital currencies are government-issued fiat currency, meaning that there's no difference between the digital currency and the paper currency. Stable coins are different because there's cash in a bank account and the cash is represented by smart contracts in Ethereum or other crypto-based tokens. Okay, so there's a different, with CBDCs, you don't need a dollar in a bank account because the digital token is the dollar itself. My concerns with CBDCs are basically twofold. The biggest concern I have is privacy. Meaning if CBDCs are implemented incorrectly, you have all kinds of privacy problems, meaning the government can track everything you're doing. Meaning if I take out a $5 bill and pay at Starbucks, excuse me, nobody knows that it was Bill that paid for that coffee at Starbucks, as it should be, okay? But if I use a CBDC that has user tracking built in, they're recording that either Bill or somebody with my IP address on my phone, which can probably be tracked, just drank water, back to my wireless carrier, made a payment. And I don't like that idea. Okay, the government has no right to know what I'm doing with my cash. Now, if I store it in a bank account, I get that there's obligations that the bank have. I don't agree with the Patriot Act. I think it's the worst named piece of legislation in history, but I get it. It's law. We don't like the law. We can elect new people into Congress. Okay. So the second issue I have with central bank digital currencies are it doesn't change government policy. They can keep their finger on the print button all day long, which they will. And instead of printing paper, they're going to print digital tokens. Okay, so yeah, we're killing less trees, but we're still inflating our currency into oblivion, right? And so central bank digital currencies don't solve that problem. Bitcoin solves that problem. All right, so sorry for the long answer, but hopefully that makes sense. It's a very important topic. I have a couple of friends who are super, super bullish on central bank digital currencies. And I have a couple of friends who are super bearish. And I would love to get a small group of them on Money Talks and have them hash it out in front of all of us. And that's something that I will try to do next year. I promise. We'll see if we'll get them to do it. But I think they will. And then I'm going to take one more question and then we'll call it a day. Super busy today. Will Ethereum be deemed a security by the SEC? I don't see how. I mean, I think that Chairman Gensler has voiced concerns with the migration to proof of stake, but there really is no off switch for Ethereum at this point. You're not making money based upon a common enterprise. It just doesn't pass the Howey test, which is the traditional SEC mandated process for determining whether something is a security. Look, the initial sale of Ethereum tokens years ago might have been a security offering, but that doesn't make the token itself a security. My opinion is individual tokens are not securities. There can be security offerings using individual tokens, right? And that's probably, for example, what happened to Ripple years ago. I don't think the XRP token is a security today. I think Ripple, the company, did security offerings around those tokens and that they should have been registered, but the SEC shouldn't have waited 6, 7, 8 years to bring a case against them to do that when they could have stopped it a long time ago. So I hope that makes sense. Let's see. Looking, thank you. They're getting a lot of thank yous today, so appreciate that. We do have our support team continues to answer your emails. You can go into the app and contact support as always. They will respond. We love our support team at Abra, and yeah. Let's see. I will take 1 or 2 more questions because I am seeing more questions coming in. What does subscription amount mean under the Boost new subscription document? It basically means how much are you planning to deposit into Boost. That's what subscription amount means. You're not obligated, of course, to deposit that amount. It's just asking you to indicate what your likely subscription amount is going to be. All right. Thank you for the really kind compliments today. We do this because we want to keep the lines of communication going. We love answering questions in real time. All right. So keep the questions coming. If I didn't get to them this week, we will try again next week. We're going to do a show next week. Then we'll take some time off from Money Talks for the holidays like we always do. And we'll look forward to catching up with you again next week. Thanks for joining us. Have a great weekend, and we'll see you soon. Take care, everyone.